everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Toronto, Ontario, Canada. And I'm on a mission to become Google Map for hardworking Canadians seeking financial freedom. And today I have a special treat for you. I have Milena here from Cardinal Law, and I'll let her introduce herself in just a second to talk about trust and trustee. Well, you may think that this is not important, but with the introduction of the Underused Housing Tax Act and the upcoming trust reporting rule requirement, this is a hot topic in the real estate investment world. So it's hard to find a lawyer out there that's willing to talk about trust agreement and trustee and trust relationship all together. But I feel that it's such an important topic that we need to address it, especially with the April 30th deadline for Underused Housing Tax Act approaching fairly quickly. So with that, but before I get started, make sure that you hit the subscribe button below and give us a thumbs up if you find our video useful. If you have any questions, make sure you leave it in the comment section below and we'll address it accordingly. Now, hi, welcome Milena.
Thank you so much for having me.
Why don't I let you introduce yourself first?
I'm Milena Cardinal. I'm a real estate investor focused lawyer.
Awesome.
My team does everything from real estate closings, of course, to corporate structures, estate planning, and even sometimes estate administration.
Wow, that's amazing. So tell me how you got started in this particular niche, or how you even get started.
Well, that's actually interesting. I feel like there were a couple of why in my road to becoming this now. I actually started out doing criminal law, and I did criminal law for a few years. And then I think my daughter was getting a bit older. I was doing a lot of youth criminal justice, meaning representing teenagers. My daughter was getting a bit older. I was ready for a change, even though I'm not sure I really knew it at the time yet. And then I met a mortgage broker who was brand new, and she was very interested in working with a real estate lawyer. And so when she found out I was a lawyer, she was very excited. And I was like, well, I don't do real estate. And her words exactly were, you do now. And so I started doing real estate at the time. And I think, like I said, I was ready for the change. So it was like perfect timing. And so then I had very much like a Main Street brick and mortar type law firm, downtown Cornwall, Ontario, small town. And so I built my law firm that way. And then I met my husband, who's American, and he moved to Canada
for love,
to be with me.
Yeah.
Yes. And, but the unfortunate part is that, my husband, who has a hard time sitting still for a movie, was not allowed to work in Canada. And so we were looking at the prospect of him being bored out of his mind for a few years while waiting for permanent residency. And so, one thing we were allowed to do was invest. So we started investing in real estate. The mortgage broker who got me into real estate in the first place, they had started investing, and they were a big inspiration, her and her husband. So we started investing. We did a few projects with them, and then we grew our portfolio. And as we were growing our portfolio, I met other investors who then wanted to work with me as a lawyer because I was also an investor. And so I grew a small group of clients who were real estate investors.
It's not so small anymore. As far as I know, you have already 12 employees in your firm, right?
Now, yes, absolutely. At the time, I would say we were maybe 4 when this was all sort of like
4
coming
is
together.
Also not small. I mean, when it comes down to small businesses, anything more than yourself is already starting to be a lot of risk and fear. But so I especially applaud you for building a business of this size, because a lot of people actually don't get to surpass that one person mark. And as a woman, it's especially crazy that you have taken it to this step.
True. Yes. I'm very proud of that.
What drives you?
I think the number one thing that drives me is wanting to show my daughter that you can do anything, and that if your heart and soul is into something, go for it. And what we were talking about right before this. We were talking about how my daughter is studying to be a paramedic, and she's 4'10". She's super tiny. And when she started telling people she wanted to be a paramedic, everybody told her she was too small, except for me. I didn't tell her that. But but a lot of people told her she was too small and that she wouldn't make it. And her response to that was like, "Oh yeah, watch me." And I think part of that is something that I was able to impart from having that attitude, because I faced the same things. You're a woman, you're never going to make it as the head of a law firm in this old boys world.
Welcome
like
to my world.
Right? You understand.
But you didn't really just start being a lawyer. You started a lot more. You have a humbling beginning too.
True. Yes. When my daughter was born, I was actually on welfare, and it was tough. I raised my daughter by myself and with very little resources. I had the support of my parents, thank God. But it was difficult. It was tough, right? And I think I kind of forgot about that. It's one of those things that it's in the back of your mind and it just falls into memory. But a few years ago, one of the things that my team does to give back is that we actually close the office for a day a year, and we go and we build Christmas baskets for our community. And so we were doing this maybe 3-4 years ago. It was pre-pandemic. And we were doing this, and my daughter joined us that day. And at one point I was watching her pack these Christmas baskets for people, and I just had this like memory of when she was a year old, and I had to go and get Christmas baskets, like a Christmas basket for her, for it to be able to have a Christmas dinner with her. And I remember that there was a table of used toys, and I was so grateful because she was able to get like a Christmas gift. And so that was a memory that I was reminded of as my daughter was building these Christmas baskets for people in our community. It was a wonderful moment.
Yes, absolutely.
Yeah.
Full circle.
Yes, absolutely.
Yeah. Okay, so with that wasn't so light a story to share, but I'm sure it is still light. I don't know if it is lighter than what we're going to discuss. So something about trust agreement. I'll tell you what I know about trust agreement. As an accountant, I've always come across with trust agreement. Even before I become a real estate focused accountant, I was advised by my mortgage broker at the time, if you want to own any properties in the corporation, the banks wouldn't work with you. They wouldn't finance it. Well, right. I think the banks have come a long way and they are now opening it up to corporation. But at the time, I was told that, you can't get a property directly in the corporation and have the mortgage registered in the corporation's name. So one way to get around it at the time was that I was introduced to this idea of trust agreement. And essentially, there is this thing called common law versus whatever, like the common law, and there's two concepts. I'll let you explain that. But I signed a trust agreement, which allows me essentially to report everything in the corporation, even though the mortgage was in my name. So that was how I know about trust agreement in the residential real estate world. Like in my previous work, I also know that all these real estate mogul, they are joining forces together, buying multiple properties. They would have a bare trustee corporation set up, owning this, and is owning in trust for like multiple joint venture partners. So these are the contacts that I have. And so, and there is one more. Coming up is the Underused Housing Tax Act. For those of you who don't know about my the upcoming filing requirement, it's coming up, and it's April 30th. If you're a trustee of if you are a Canadian resident that's acting as a trustee, owning properties in trust for something, could be a joint venture, it could be also a corporation, you may be dinged. So a lot of people are posing questions like, well, what is trustee? And so that's why I have you here. So tell me a little bit more about what this trust agreement and trust relationship is.
Sure. Well, maybe I'll start by explaining what is a trustee, because I feel like that at the base, it's the foundation. It needs to be understood. And so there's so many ways in which we act as trustees in our lives without even realizing it. One that's pretty standard or pretty well known is when you act as an executor or trustee for somebody's estate. So a family member dies and you're acting as their executor. That's a trust relationship. When you hold money, when you take action, when you go to the accountant, you're acting as a trustee for the estate. But there are simpler ones. For instance, if you have minor children and you're maintaining their piggy bank, you are their trustee. If you take the money that they receive from grandparents and whatnot, and you accumulate it into a bank account, you're acting as trustee. If you sign for them any forms, you're acting as their trustee. Most of the time we won't refer to that term. We'll say you're the guardian or you're the parent, but the reality is that is also a trust relationship, right? So there's so many different concepts. There's so many different times that we are acting as trustees in our lives, right?
So there is, from what I'm hearing, is that like a trustee may be formalized on legal paper, but it could also be no paper, no legal document.
Like almost automatic.
Almost like automatic. Just for the information, I keep my my money, my kids' money to myself. So there is no trust relationship. I hold it but
slip it in the pocket.
So as a trustee, they have their own piggy bank. They actually guard their own piggy bank. But I do remember using that is a great example. I do remember going to the bank, opening a bank account, saying that these are for my kids. This particular bank account is for my kids. I'm really signing off as a trustee. And the bank document is actually using trustee terms as well.
Absolutely.
Yeah. So that's interesting. Right. So like now, I know that Underused Housing Tax Act, the new crazy legislation that came out that totally ruined all the real estate investors' life. Which is just beginning, unfortunately. But so it mentioned trustee has to file tax return if like the properties are triplex and under. Now, my question to you as who's a trustee, a common example, the most commonly asked question is like, let's say my parents just add me to the title of their property. And I have a brother. I'm really being added because they just wanted me to deal with all the paperwork and payment. And so they don't have to worry about it. Am I also acting as a trustee in that case?
Well, if you're not an actual owner, for instance, if it's your parents' home and you're only added to the property to be a trustee, which is what I believe you are describing, then yes, you are a trustee. If you're only there to assist with the paperwork and whatnot, even to a bank account, same thing. You can be added to a bank account, and the law has changed now in respect to estates that says that if the intent is to add you to the bank only for the purpose of helping with the banking, then you are acting as a trustee. So there's a lot of those relationships, and especially in the real estate investor world, it's really important to define what is the role of that person in that relationship. And so I think my biggest fear is with people who are not savvy and don't realize that they're acting as trustee and the consequences that will mean for them, especially when maybe people who are not real estate investors are then putting their name on their parents' house to help with paperwork and whatnot, right?
Yeah, they are.
Because this happens all the time.
Yeah, it's a primary residence, and because of how poorly the Underused Housing Tax Act is drafted, totally not really intended for what it was meant for. But so all these people would have the filing obligation, even though they have no tax to pay, which sucks for them. Now, you also mentioned earlier before our recording about how joint venture. So you're also you could also be potentially acting as a trustee for joint venture. So let's describe a common example, because it happens all the time among our clients. Two parties come together and they decided to form joint venture. For financing purpose, only one person go on title. For whatever reason, business reason, financing reason, only one person go on title. And they sign a joint venture agreement. Together, forming that relationship, and they report whatever percentage that they said that specify in the agreement. So is the person on title also a trustee?
Yes. Yeah. Yes, they are. So even though the joint venture agreement should address anyway the trust relationship inside the joint venture agreement. It's not a separate agreement. Like, people will call me sometimes and say, well, do I need a bare trust agreement to go with my joint venture agreement? No, you don't, because the bare trust agreement is basically is addressed in the joint venture, the trust relationship. So it's automatically created if one person holds it in trust for another person. So if you have so say you and I decide to buy a property, and you bring in the equity, you bring in the money, and I will be the managing partner, and we decide that the property is going to be in your name, then you're holding the property in trust, 50% in trust for me, if that's our arrangement. So it's extremely important to know, because this is surprising a lot of my clients even that are like, wait, I have to report under the Underused Housing Tax Act because I'm a joint venture partner. Like, it doesn't necessarily register, because as you said, it's capturing a lot more situations than I think was the original intent. And I'm sure it will adjust, but for now, that's what we have to live with, right?
Yeah, there's like 13 interpretation that was released by CIA over the last month or so.
Yeah.
Actually, within a duration of 15 days from February 1st to February 15th. It's not just Underused Housing Tax Act. This particular relationship is actually called out by the new trust reporting rule, which is going to be effective this year, and the filing deadline for it is next April. But it's going to affect anyone that has that relationship in current year. You are required to file a reporting trust return next year. And I'm hearing my clients screaming at me, why are you charging so much, and doing the tax returns and all these, because we're really just a messenger.
Absolutely.
But I'm sure you can also attest to this. You're a small business owner. I'm a small business owner. We face a lot of filing requirements ourselves, operating our own professional firm. So you're also a real estate investor. I think real estate investing on its own is it's one of the least required, or like has the least amount of filing requirements, like from an operation perspective.
I mean, if I compare my real estate portfolio to my law firm, I would say that's true.
Yeah. Like, I know, I just wanted to put things into perspective. A lot of people are like, well, there are so many filing. Well, yeah, but if you operate a regular business, not just a real estate rental business, you also have a lot of filing, like WSIB.
No comparison.
Yeah, like law firm would even have more, because you have that trust account reporting as well with your law society. So I thought that, like just to put things into perspective, the government, is targeting the real estate investor industry, but at the same time, it's still relatively mild compared to what we have to go through.
Absolutely.
Yeah.
We have different trust account for different purposes, and we have to file not just with the law society, but also the bank is required to do filings for all trust held accounts, so they require us to report to them on all of our trust accounts, and not just per account, but per amount, like per client that is in the trust account that we hold trust funds for. So it is very onerous. And so you're absolutely right. In comparison, the real estate investors, in my opinion, the filings are still fairly reasonable, despite these new changes that are
coming.
A bit of a whirlwind.
So I always get this question. So using the example that I mentioned earlier, my mortgage broker told me, hey, like, you can just own your property in trust for your corporation, and then your corporation would then be able to report everything from the beginning related to that particular property, assets and liabilities, revenue and expenses, all inside a corporation. So that was always the situation. And so with trust agreement, when I call my lawyer up, they sometimes do not like me asking that questions. Why do you want to do trust agreement? Like, they would brush me off. Why?
I think it's because it's such a minefield, right? It's risky because banks have specific rules and have specific obligations in the mortgage contract with the borrower as to how the property is to be held and what the ownership structure is. And banks want to know what that ownership structure is, but they will also want the joint venture partner or the beneficial owner, which is we have the trustee, and then in favor of the beneficial owner. In your example, your corporation would be the beneficial owner. They would want to qualify the beneficial owner as well a lot of the time, which then makes it really difficult for the investor or the borrower to get qualified. Then what's the point, right? So I understand that there's sort of like two sides to the story, and it's tricky for us lawyers to navigate those waters in a way where if we represent the bank and the borrower, and now we also know about this trust relationship, it can negate our ability as lawyers to represent the bank. And then if we have to tell the bank, we can't represent you on this, then it's a huge red flag to them and they're going to pull the mortgage. Yeah. So it's finding that balance is really important. Personally, I'm of the view that tell your lawyer everything ahead of time. Yep. And then let's find a way to make it happen if it's doable within what the rules are and what your contract with the bank says. So I find that it's important but the lawyer's going to have to spend time digging through some of that information to make sure that you're not, we're not inadvertently causing you to step into something that will cause the mortgage to be pulled.
Yeah. So when you do a trust agreement, make sure that you speak with someone that actually knows the law, because it's really, and also the bank requirement as well. And it's very important to talk to some of these people to make sure that you don't step into the landmine.
Exactly.
Unnecessarily expose yourself to something bigger.
Exactly. Yeah.
So one other thing that I have in my mind is that when you there is many people ask me this question in the past, is that, hey, like I have a trust relationship, or I have a trust relationship long time ago. Can I backdate my trust agreement? Mm-hmm. Can you backdate a trust agreement?
I can backdate whatever you want. But it can, again, it's like, I think it's very important to look at it holistically to see if that works. So one of the main blocks to doing that is if the corporation doesn't exist. So, you buy a property January 1st, you create a corporation March 3rd, really difficult to justify backdating it. Now, if it's a few months, I can say, well, it was always the intent to incorporate, and I will put that in a trust agreement. I'll say it was always the intent to incorporate, and it just took time for things to get done, so it is still in trust for the corporation. I always warn my clients that that's a bit of a risk. I don't know how CRA is going to interpret that, and to please talk to your accountant to make sure that you're not stepping into something.
We shuffle the risk back to another person's court, another professional court all the time. Can we do that? Talk to your lawyer,
Or let's talk together and figure it out. That's what I love to do.
That's a great example that you're sharing, because it happens all the time. Because the client would question me, I said, well, you haven't set up the trust, the corporation. Why are you having that trust agreement set up and at the beginning? And they would fight me. And well, it's for a corporation to be incorporated. So how long can that period be? Is it a year, 2 years, 3 years?
Well, no, because you're going to have reported. I think once, well, you tell me, but once you do that first tax return where you include that property, you have to report it somewhere. So usually you'll have reported it in your personal name. Yeah. And then at that point, it's really difficult to backtrack, if I understand correctly.
Oh, yeah. It's not possible. It's called retroactive tax planning. It's not possible. So you don't want to tell CRA that you're doing retroactive tax planning, and that's just not a good idea.
Exactly. So I think that's really the absolute cutoff is your first tax return's been filed with that property.
Yeah, but then before that, it is still a risk.
It is, but what I've seen done often, and I don't think that's really a problem, is if you have your corporation, you buy the property, and then we draft the bare trust agreement a few months later, backdate it to the date of registration, as long as that was always the intent, and it's just we didn't quite get to it on time. That's not that big of a deal. But the problem happens when, I should have bought that in trust 6 months ago. Sorry. Can I now backdate it to 6 months ago? Well, that's a tougher question.
Exactly. So, like we talked about in the earlier on, the trust relationship, as long as there is an intention, correct me if I'm wrong, then if the intention is there and there is documentation to support your intention to prove to CIA if there was any audit that came up, then the trust relationship is already established at that time. So one of the common, I guess one of the common things that I come across is that the parents buy properties in their name and they always intended it for the kids to live in Toronto condo all the time, and they never have this trust agreement, but they always have it intended for the kids, but they pay for everything. Like, how do you show the intention?
That's the tricky part, right?
Yeah.
It's like, oftentimes, so one of the tools that we use, so there's the bare trust agreement, which is usually established at the beginning of the relationship. So, you buy in trust for your corporation, would create a trust agreement at that time. 5 years later, when you sell it, you have the trust agreement dated 5 years ago. But oftentimes in these family relationships, or or when somebody is on title to qualify for a mortgage, the problem happens when they try to transfer it back, and then you've got to pay land transfer tax again. And so one way that we get around that is to do a trust declaration that says, from day one, I was acting as trustee. And so it works well is in scenarios where somebody is on title just to qualify for the mortgage and has never done anything with the property. It serves two purposes. If that person doesn't live there and the beneficial owner lives there, it can avoid capital gains tax. And number two, it avoids land transfer tax. Doesn't avoid it on closing, but it allows you to claim it back. So I've done that. I do that quite often, actually.
Cool.
Oftentimes not with real estate investors, because real estate investors usually know better and established a trust relationship from the beginning, but not always. And so, especially in scenarios where somebody owns a house, they're not qualifying for the mortgage, their girlfriend, their boyfriend will put their name on title just to qualify. And then 5 years later, when they refinance, they say, well, we want to put it back into the name of the original owner because it was never intended for that person to own the property. So that's when we'll use a trust declaration instead.
Wow, that's awesome.
But I do think it's more powerful if it exists from day one.
Oh, yeah,
a bare trust agreement from day one is so I personally like to really dig into my client's story and say, why are you adding this person to title? What's the intent behind this? Let's protect all the parties involved by having a proper bare trust agreement drafted.
Yeah, absolutely. So that's great to know. Like, you have all these tools in your toolbox, but having these tools in your toolbox and using these tools do not always guarantee that, hey, the result is always going to be, hey, no tax. At the time of the transaction, you still get audited. That's our line of work, right? Yeah. So one last thing before I let you go. We've talked a lot, and a lot of the information is very dry. For those of you who are still with us, thank you for staying with us. So for situation, you mentioned land transfer tax. I get lots and lots of questions about, hey, like, can I transfer my property to a corporation without triggering land transfer tax? And the funny part, I know the answer. Most part, I know the answer, but I can't say all scenarios. I think you're the one that's executing that land, the land transfer tax, at least in Ontario. So tell me what you think about under what scenario the land transfer tax could be avoided, and under what scenario land transfer tax cannot be avoided.
Right. Well, one thing I want to say as well before I answer that question is that when we register title in the first place, there is always a form that we have to fill. And most clients are not necessarily aware. It's one of the many things that we do. And so when title changes hands, we have to fill out a form that goes to the ministry. Like, we actually fill it out online, so it goes straight to the ministry, and it establishes who the owner is. So when there is a trust relationship, normally for that trust relationship to be formalized, that has to be laid out at the time of purchase. And so every time, if you have one lawyer doing the purchase, one lawyer doing the bare trust agreement, and the purchase lawyer doesn't know, they won't fill that out properly. If that isn't set out properly, I believe that it could be a bar to getting the land transfer tax back, at the end. Not that it hasn't been successful, but it is something that's important as well. So I just figured I'd bring that up. But so the answer to your question is land transfer tax applies when the beneficial owner changes. So if you have a property, if you buy a property in your personal name, and from day one, the lawyer sets that out properly in that form I just talked about, that the corporation is the trustee. And 5 years later, when you go to refinance, you want to transfer the property from your personal name to your corporation, because now your corporation has 5 years of financial statements and showing profit. Then the corporation's able to qualify, and that's why I love that tool, by the way, is to build that history in the corporation. So now your corporation can qualify for the mortgage on its own. So you then want to transfer the property to the corporation. You're gonna have to pay the land transfer tax on closing. Take a quick step back. You could 6 months before or something like that apply to the government to get that exemption, and then you get that exemption back from the government. You're going to pay quite a bit in legal fees to get that done, because that's not simple. But then you then get you get an authorization from the government that says you don't have to pay land transfer tax, and then you can avoid it. But most of the time you have to pay the land transfer tax on closing. But if we can show the trust relationship from the beginning, we can then apply to get it back.
That's interesting. I've done that before with a trust agreement, though. Would that
Exactly.
matter?
Yes, the trust agreement has to be there. They will want it to get that back.
Oh, okay. So the process is that you still do the transfer, but you could get the land transfer tax back from Ministry of Finance.
Correct.
So it's a separate process.
Exactly.
You would not be able to close without triggering land transfer tax.
Right, because it's deducted from my bank account. When a client closes and I hit the button to register, the land transfer tax gets deducted, unless I can tick the box that says the ministry has allowed the transaction not to have land transfer tax, which takes months to get approved.
So you also mentioned earlier that if it was set up properly when you purchase the property, then you would be able to avoid a land transfer tax. Is that right?
Sorry, repeat that. If you purchase...
mentioned earlier when you purchase, they specify whatever on the purchase side. Right. Then later on, you would be able to get the
no, if you purchase it in your personal name, and then when you go to transfer it in the corporate name, you have to pay it again. But then that you can get back if you set it up from day one. Okay. Now, if you own a property in your personal name, and then you incorporate 3 years later, and then we use a bare trust agreement to say that for the time being it belongs to your corporation until you actually register the transfer, then no, because from day one you owned it personally, right? So their land transfer tax will be triggered, or it'll be deferred. You're technically supposed to pay it at the time that you transfer the beneficial ownership. Most of the time it gets delayed because it's not thought of at the time, and then it gets delayed, and then when we register the transfer to the corporation, then it gets paid again. There's no way around paying land transfer tax when you either roll or sell or donate a property from your personal name to your corporation. There's no way around it. The only way around it is when the beneficial ownership belonged to the corporation from day one. So and that's one example, but another example is, a woman owns a property in her personal name, her home in her personal name. She doesn't qualify for the mortgage loan. Boyfriend puts his name on title for the purpose of qualifying for the mortgage. 5 years later, we transfer the property back to her alone. There's going to be land transfer tax at the time that it's transferred from her name to both names, and again, land transfer tax when you transfer from both names to her name. The way around that is there's two ways around that, but the way around that, if they have to be joint tenants, which would mean that they would be 50-50, is to use the bare trust agreement in order to get the land transfer tax back both times. The other way around it, it's not really a way around it, but the other way that I do it is to give a tiny, tiny piece of sliver of ownership to the person coming to qualify. And if we can do that, then you're paying $10 in land transfer tax, and it's better than paying the legal fees to apply to get the land transfer tax back.
Oh, that's interesting. That's interesting. Well, we cover a lot. I mean, a lot of people are curious now. By now, I'm sure a lot of people would want to reach out to you. How do people reach out to you?
Either by email at mcardinal@cardinallaw.ca. Our website's cardinallaw.ca, so contact is on there, and or by phone. Phone number's on there as well.
Awesome. So your contact information will also be in the YouTube description below. For those of you who appreciate this video or as much as at least as much as I do, please give us a thumbs up and share with people who could be affected by this Underused Housing Tax Act. And make sure you hit the subscribe button below as well. And again, thank you so much for joining us today.
Thank you. Thank you for having me.
Yes, bye.
Bye.